hello. Welcome to our next chapter. So of course we are doing our audit series from our audit in 100 pages. So we've already done with all standards. We are done with this chapter, that is audit planning, strategy and execution, and I'm also giving you mnemonics in the videos. So today we are doing risk assessment and internal control. So this comes for an average about 2.4 marks in each attempt. So it becomes a comparatively important chapter. Okay. So I am also giving you keys to learn, so that each topic I've made it as a summary form, so that each topic you know what all points are there, and this is your ultimate last day revision. That is, these points you have to remember. Okay. So we will be doing this, and our key, so our today's chapter theme is movies based. So all our keys, all our mnemonics will be related to movies. So over here, this is your RRR, this is any popcorn reels, anything. So everything, all our keys will be with regards to movies, so that you don't confuse keys between different chapters. Great. So let's start with our chapter. So our chapter is risk assessment and internal control. First of all, like the video, pause this video and like the video. Then we'll move forward. Okay, it just takes 2 seconds. Just like this video. Great. So there is this chapter is there in 56 pages in ISA study module, which I have summarized in 3 to 4 pages. So it starts with risk assessment. What basically is risk assessment? Risk assessment assesses the level of risk in various business processes. So there are different types of risk that a business faces. Risk assessment focus on the business environment, regulatory environment, organization structure. So that is the business environment, the regulatory environment, the organization structure, organizational and business environmental changes. So any changes that take place are also all covered under risk. So our types of risk have been defined. So your first type of risk is your inherent risk. Now inherent risk, you have heard it multiple times. Inherent risk is susceptibility of an assertion to a misstatement that could be material. That is the possibility that is assertion has a misstatement, or assertion is a misstatement which is material. So that is your inherent risk. Now this is addressed at both, that is your financial statement level and your assertion level. It is at both places your inherent risk. Now second is your control risk. Control risk, what does control risk means? That the entity's internal controls, that is the internal controls that the entity has put in place. Risk that the entity's internal control will not prevent, detect and correct a material misstatement. That means a material misstatement has occurred, but the entity's internal controls will not be able to prevent, detect or correct the material misstatement. That is your control risk. Now, third is your detection risk. Detection risk is the risk that the auditor will not detect a material misstatement that exists in the assertion. So, control risk is the internal controls will not be able to identify. Your detection risk is that the auditor will not be able to find these. Okay. Now, your fourth is your risk of material misstatement. So, basically, your risk of material misstatement is a combination of two risks. One is your inherent risk, and second is your control risk. Inherent risk, of course, that risk has there, and control risk that the internal control will not be able to identify. Therefore, this is your 1 into 2, that is a combination of 1 and 2. And next is your audit risk. Audit risk is risk of expressing an inappropriate audit opinion. That means you have expressed an incorrect audit opinion on financial statements that are materially misstated. That means the financial statements are misstated, but you were not able to find those misstatements. So this is basically your 3 into 4. Now 3 into 4 is your detection risk and risk of material misstatement, because detection risk is with regards to the auditor, and 4 already has 1 into 2. So basically your audit risk is a combination of 1, 2 and 3. Okay, now you may also refer essay 315. Also, I have also uploaded the video for essay 315. You can go to the playlists and search the video. So if you want a more understanding, you can refer essay 315. Great. So now coming to your risk-based audit approach. Risk-based audit approach means we will be defining our procedures, etc. Everything based on the risk that we have identified. So our focus will be on areas of greatest risk. Wherever we feel there is great risk, that is where we will follow to achieve audited entities objective. Okay, so to achieve what the objective of the audit is, we will focus area on the areas where there is the greatest risk. Large proportion of audit resources are allocated to high risk areas. Of course, makes more sense. More time, more qualified resources, employees will be put at that place. Okay, now next is your audit risk analysis. Audit risk analysis is audit to analyze audit risk that impact the auditee before undertaking specific audit procedures. That is, you have to analyze that, boss, which risk is my auditee impacted by, that is my client impacted by. Audit risks are brought about by error. Error is your unintentional, that is by mistake, and fraud is your intentional. So audit risk is brought to either by unintentional, that is your error, or second is your fraud, that is intentional. Responsibility of auditor to plan and perform audit to obtain reasonable assurance that financial statements are free from material misstatement. So it is the responsibility of the auditor that he has to plan and perform the audit in such a way so that he has reasonable assurance. You can never have absolute assurance, but reasonable assurance. Why I am specifying on these words? So that you remember to write during the exam. Whenever you write assurance, you write reasonable assurance that financial statements are free from any material misstatements. Okay. Now phases of risk-based audit. Phases of risk-based audit. Here comes the first key of the movie, that is your RRR. So everybody knows, I think, about the movie RRR. So this is your first key for phases of risk-based audit. So I will also tick mark this over here so that it is, we know which keys we have done. So I'll make a circle so that when we revise later we can tick mark. So that is your phases of risk-based audit. What are the phases of a risk-based audit? Is your RRR, that is triple R. Okay. So that is your risk assessment, risk response, and reporting. Risk assessment, risk response, and reporting. Okay. So these are your 3 points that we have done: risk assessment, risk response, and risk reporting. Okay, so let's understand what each point means and then we'll move forward. So for those who only want the learning part, I will, in the end, I will only do the learning part, only the mnemonic. So if you want, you can skip to the end of the video. If for those of you who do not want an understanding, who only want to learn. Great. So phases of risk-based audit, as we did, first is your risk assessment, second is your risk response, and third is your reporting. So of course, you will have to assess the risk, that is perform client acceptance procedures, assess design and implementation of internal controls. You will have to check how strong are my internal controls and communicate any material weakness in your internal control to TCWG. Any material weakness should be communicated to the TCWG. That is your risk assessment. You are assessing the risk. Now, once you have assessed the risk, you will respond to the risk, correct? So you will try to mitigate the risk. You will try to remove the risk. So that is your test operational effectiveness of internal control. Over here, what did you do? You did design and implementation of internal control. Over here, you are testing the operational effectiveness of the internal control. And second is substantive procedures such as test of details and analytical procedures. So you know substantive procedures have two, that is test of details and analytical procedures. Great. And coming to your third part, so what did we do? First we did a risk assessment. That is, boss, what is the risk you need to understand. Once you did your risk assessment, next is your risk response. That is, you will respond to the risk. And third is, once you have respond, you will have to report this risk. So third is your reporting. So audit findings to be reported to management and TCWG. Whatever audit findings we have found, that is to be reported to your management and TCWG, both of them. And next is, an audit opinion should be formed and a decision made on the appropriate wording for the auditor's report. You have to properly word your report because a lot of stakeholders will be relying on it. Great. So what did we do? First we did was your risk-based audit. Now we are doing your internal control system. So internal control system is specific policies and procedures designed to provide management with, again over here it is reasonable assurance. With reasonable assurance that the goals and objectives it believes of the entity, which it believes are important to the entity, will be met. Okay, so these are policies and procedures defined so that these objectives are met, there are no hindrances. When obtaining audit evidence about the effective operation of internal control, the auditor will consider three things when checking the effectiveness of the internal control. I hope everybody knows the difference between effectiveness and efficiency. Effectiveness is how accurately, how correctly is the work being done by whatever work is intended, and efficiently is maximum output with least input. Okay, so therefore the word is effective. Great. So what will the auditor consider? Auditor will consider three things. First is how they were applied. Next is the consistency with which they were applied. And third is by whom they were applied. So how, whom, consistency, how, consistency, whom, how, whom, consistency, how, whom, consistency. Great. So that is how they were applied, the consistency with which they were applied, and by whom they were applied. So they have to ensure that all transactions are recorded. So all transactions need to be recorded timely, and they should be real. So these are basically your three R's. Okay, so that is recorded, they should be recorded timely and real. All these are the characteristic of the transaction. So these are your three R's, and your P is basically your properly summarized, properly valued, properly posted, and properly classified and disclosed. So I thought it will be a little confusing to learn these because all are P for properly. So sir, what about the next word? So in the key that I've made the key based on the second letter. That is, over here I've picked up S, over here I've picked up V, over here I've picked up P, and over here I've picked up C. Okay, so our key that is made, so this is when obtaining audit evidence. Of course, we did this how, consistency, and whom. This we have done. Okay, now next is IC ensures that all transactions are, of course, we did 3 hours. So we are still watching RRR movie. So that is your 3 hours. What did we do? First is it should be recorded, then it should be recorded timely, then it should be real. Okay, so recorded timely and real. And next is your CPVS, that you remember is PPPP. So first, if you are properly classified, so properly classified is there, properly so that is RRR, popcorn very small. So since the movie was so big, the popcorn was very small. So P stands for posted, C stands for classified, V stands for valued, and S stands for summarized. Okay. So P, popcorn very small, that is PCVS. So I've also made the key so that it is easier to learn. Okay, so we'll be revising this at the end of the chapter, so don't worry, we will be doing it once again. Okay, now your internal control system, how does it help? How does internal control system help? That is, compliance with laws and regulations ensures reliability of internal and external financial reporting. Okay, so it helps in reporting purpose. Next is your effectiveness and efficiency in operation. That is, both your E's are here. And next is your safeguards the assets of the company. Okay, so this I've played a little bit over here and there, and a key that I've made is reels. Okay, so that way it will be easier to learn. For now, you do the understanding part, we will do the learning part later. Okay, in this video only, but we will do it later. Okay, so how does it help? So assets are verified at reasonable intervals. Since your internal control specifies when assets need to be verified, your assets are verified at reasonable intervals, and appropriate actions are taken for discrepancy. That is, whenever you will verify the assets, whenever you will physically verify the assets, any discrepancy that you get, you will be able to take your correct actions for it on a timely basis. Next is transactions are executed through general or specific management authorization. That is, either there will be a specific person authorized, or there will be a general authorization that the management has defined. All transactions are promptly recorded. Okay, so over here also promptly recorded, over here also is recorded. Okay, next is assets and records are safeguard from unauthorized access, use, or disposition. So if you see, this is very similar to our this point that we learned over here. Assets and records are safeguard from unauthorized access. So your internal controls objectives are very similar to the advantages or how it helps. Okay, now what are the limitations? For the limitations, your first is manipulation by management. Okay, because because management has a lot of power on the internal controls. Next is, most internal controls are not directed at transactions of unusual nature. So if any transaction comes which is not similar to others, so therefore most internal controls are not directed at transactions of unusual nature. That means your internal control will not be able to find out any abnormalities in this transaction. Next is circumvention of internal controls through collusion with employees or outside party. That is, by joining hands with the employees, it is possible that you might be able to bypass or overpass the internal control. Next is management consideration that your cost exceeds the benefits that your internal control has. The cost of implementing the internal control is much more than the benefits. And last is person responsible for exercising internal control could abuse that responsibility. So if there is any control whose responsibility I have, if I wish, since I only have the responsibility, I can forego that internal control and I can execute a transaction. Okay. So let's see what keys we made for this. So right now what we did internal control, we did internal controls, three things. First, we did how it helps. Second, we did its objectives in the middle. And third, we did limitations. Green block, green box, black box, and red box. Okay, great. So we did IC helps them. So internal control helps in making reels. Okay. So for reels, what did we do? We did R for reporting. Then with both E's, we did effectiveness and efficiency. Okay. So we are done with R, E, and E. Then with L, if you remember, the first point was laws and regulations. Okay. So that is your L. And your last point S is safeguard of assets. So if you remember, this safeguard of assets was also there in your objectives. In your objectives also, it was your last point. So this is what your internal control helps in. Okay. Next is your objectives of internal control. Objectives of internal control we did in the middle. Okay. So try remembering objectives of internal control. So the acronym for this is sweet actors very rare. If your actors usually have a lot of attitude, remember all our keys are related to movies. Okay. So sweet actor very rare. That is your SAVR. SAVR. S stands for assess and recalls are safeguard. Okay. Next is your transaction authorization, asset verification. So these are the letters that I've picked up. I've also made them bold so that you can identify them easily. So assets and records are safeguard, transaction authorization, assets verified and actions are taken. And last is transactions are promptly recorded. Okay, so this is our key. Sweet actors very rare. Sweet actors very rare is your key for objective. Objective of internal control. And then we did limitations of internal control. So limitations of internal control is UMAC, that is unhappy Marvel actors can't concentrate. Unhappy Marvel actors can't concentrate. Okay, so with U we did unusual transactions. Okay, so with U we did unusual transactions. With M what did we do? That manipulation by management. Manipulation, management both are M. Okay, with A what did we do? That the person who has the power, he can abuse the responsibility. So abuse of responsibility. Then with C we did collusion with employee. That is, if you mix with employees and do this, it is possible. And last C is your cost is greater than benefit, that the management might feel that the cost of implementing this will be greater than the benefits achieved. Okay, so your helps, where internal control helps. If you remember your key, close your eyes, just listen. If your we did internal control helps. Internal control helps in first we did is reels. Okay, so we know both E's, then we know L, then we know S. So R is your reporting, then E was your effectiveness and efficiency, then L was your laws and regulations, and last S was safeguard of assets. That was your help. Then objectives of internal control. For objectives of internal control, if you remember the key, we did sweet actors very rare. That is SAVR. With S, of course, we did safeguard of assets. Then what did we do with A? We did transaction authorization. Then with the letter with the letter V, did assets are verified and actions are taken. And last with the letter R, we did the transactions are promptly recorded. Okay. Then we did limitations of internal control. Limitations of internal control. What key did we come up? We came up with the key that unhappy UMAC, that is unhappy Marvel actor can't concentrate. So U is unusual transactions. M we did manipulation by management. A what did we do? That is your abuse of responsibility. With C we did collusion with employees, and other C we did cost greater than benefits. Great. So now the next thing that we will be doing is your structure of internal control. Great. So your structure of internal control. So I've made a key that soda at Sardik. Okay. So this you're having soda in a theater, so, and the theater name is Sardik. So therefore soda at a Sardik. Okay. So that is your segregation of duties. That is this is your SOD. segregation of duties. This is authorization transaction. This is accounting and safeguarding of assets, that is your ASA. And next is your adequacy of records and documents. So AR, adequacy records and documents, and last is your independent check, that is IC. No one will write this IC as internal control. Structure of internal control cannot have internal control in it. It will be a different word. Okay, so please do not write internal control. It is independent check. Okay, so first is safeguard of asset. So safeguard of asset is no one person carries the transaction from start to end. It ensures that fraud and error is not detected for a long time, because if one person does from start to end, it is difficult to detect any fraud. Then following functions are segregated, that is any authorization of transaction, execution of transaction, physical custody of related assets, and maintenance of records and documents. All these transactions are segregated, that is different people are doing this job. Not one person can do all of these, because there are more chances for fraud. So that is your segregation of duty. Then next is your authorization of transaction. Authorization of transaction, delegation of authority to different levels for controlling execution of transaction. So this has been delegated, that is this work has been assigned to other people at different levels. Next is your authorization, may be general or specific. Either a general authorization may be given, or it must be given to a specific person. Okay. Necessary to establish procedures which provide assurance that authorization are issued by person acting within scope of their authority. That the person who is giving the authorization, he should have authority of the same, and that the transaction conform to the terms of authorization. That is, whatever the term and conditions have been set for authorization, the transaction actually complies with them. Great. The next is your ASA. So we already did soda ad. Now we are doing ASAR DIC. So ASA, ARD and IC are left. So ASA stands for accountability and safeguarding of assets. Accountability and safeguarding of assets. What are we doing? We are doing structure of internal control. Structure of internal control. What did we do? First is your segregation of duties. Then second we did AT, that is your authorization of transactions. Now we are doing soda. Now we are doing soda. We have already done soda at. Now we are doing asardik, that is ASA. ASA stands for accountability and safeguarding of assets. Okay. So your process starts from acquisition of asset till the disposition. Disposition is basically either you let it off or you sell it off, however, that is you lose control of it. Safeguarding of assets require appropriate maintenance of record and periodic reconciliation. To ensure that your assets are safe, we should do periodic reconciliation and ensure that our records are appropriately maintained. And last is assets susceptible to fraud need to be reconciled more frequently than others. Reconciled with what? Your physical verification has to be checked. Your physically assets have to be checked with how much assets are being shown in the book, because the amount shown in the book has to tally with how many physical assets you have, and the rest will be have to be written off. Okay. Now next is your adequacy of records and document, that is your ARD. So transactions are promptly recorded at correct amount. Transactions should be classified in appropriate account. Transaction to be recorded in such a manner so as to facilitate preparation of financial statement as per your FRF. Okay, so that is your financial reporting framework. So transactions first should be recorded at correct amount. So this is your correct amount. It should be classified in the correct account. Then it should be recorded in such a manner so that it will facilitate the preparation of your financial statement, that it is helps in preparation of financial statements. And last is record of asset shall include their location so as to identify them during physical verification. That means when you are actually physically verifying the asset, it should be maintained, it should be mentioned in the book that where my asset is being used currently, so that it is easier to find. Okay, so we are already done with SODASARDI. Sorry, ARD. Now we are left with IC, that is your independent check. So independent check is periodic review by independent person to ensure that all controls are operating effectively. Great. So this is your structure of internal control. Structure of internal control. I hope you will now remember. Structure of internal control is soda at asardik. Soda and Asardik. So Soda was segregation of duties. Then AT was authorization of transaction. Then ARD. So ARD was your accountability. Sorry, ASA, that is your accountability and safeguarding of asset. Then we did ARD, that is your adequacy of records and documents. And last was your IC. IC is your independent check. So this was your structure of internal control. Great. Now next is your components of internal control. What are your components of internal control? So for components of internal control, there is a key to remember is MESSI. So M-E, MESSI usually spelled with MESSI, but over here it is MECCI. Okay, so MECCI. What key have we made to remember this? Let me also check. Okay, no, that's all. So it's only MESSI. So you have to remember that is your components of internal control. So components of internal control, first is your M stands for monitoring of controls, E stands for entities risk assessment process, C stands for control activities, another C stands for control environment. So both your C's are control. One is control activities, one is control environment. And next is your I stands for information system and communication. So these, what are these? These are your components of internal control. What did we do over this? That was structure of internal control. So what I want is while watching the video, you remember all these notes so that for example, you can quickly slide through. You remember that this is there, then this is there, then this is there. Yeah, this was the key. This was the key. Yeah, I've done. Okay. So components of internal control is monitoring of control. So monitoring of controls has basically two things. That is, both are internal. One is internal check system and one is internal audit. Great. So components of internal control, one is internal check system and second is your internal audit. So arrangement of staff duties in such a way that no one person carries a transaction and records every aspect thereof. That means what did we do? That no one person shall do anything from start to end. Objectives: detect error and fraud with ease. Next is locate responsibility area where fraud has actually occurred. And last is your increase the efficiency of staff in the organization. That it means your staff produces better outputs. Now, effectiveness of internal check depends upon how effectiveness the internal checks are, how effective the internal checks are. That will depend on your clarity of responsibility. That is how clearly you have told people whose responsibility is what. Second is division of work. No one person should be given everything. Work should be appropriately divided based on the person's competence and how much time that work takes. Next is your standardization. That means the process have been standardized or not, and because otherwise this process will vary as the people keep changing. And next is your appraisal. That is whether we are appraising, whether we are checking the effectiveness of internal checks or not. Okay. So this was your internal check system. Now second is your internal audit. Internal audit is an independent appraisal function within the organization to examine and evaluate activity. So it is an independent appraisal function that happens others it happens apart from other departments. Its scope is determined by management. That is, the management identifies that which areas they will audit, how much depth they will check, how many samples they will take, everything the scope will be determined by the management. Next is check whether management controls are adequate and each division is fulfilling plans. So all of this comes under your internal audit. Great. So first we did is components of internal control. So under components of internal control, our first point is monitoring of control, because first is monitoring, that is you have to check. Okay. Now your next E stands for entities risk assessment process. That is how does the entity carries on the risk assessment process. So risk can arise or change due to the following circumstances. That is why risk may arise or when it may change. So the key is B tab is for G, that is Bollywood tab is for gangsters. So B tab is for G. So now your B stands for new business and models. B stands for new business and models. T stands for new technology. Then your A stands for new accounting pronouncements. Then your P stands for new personnel. Then your I and S stands for information systems. F stands for foreign operations. O stands for operative environment, R stands for restructuring, and G stands for rapid growth. Okay. So your key is B tab is for G, that is Bollywood, tab is for gangsters. So B tab was new business. Great. Then T was new technology. Then A, if you remember, it was down, it was your accounting pronouncement. Something new accounting pronouncement, correct. So new accounting pronouncement. So your we are done with B, T, A. Now the next letter is P. So P was your new personal, that is new people. Then I and S, if you remember, was one word, that is your information system. So it is new or revamped information system. So B tab is we are done. Now F, if you remember, F was your expanded foreign operations. Okay. Then O also was related to operations. So it was changes in operating environment. So B tab is FO. Now R, what did we do? We did corporate restructuring. And next last is your G, that is your rapid growth. So B tab is for G, that is the risk can arise or change due to these circumstances. B tab is for G. B tab is for G, that is the risk can arise or change due to the below circumstances. Great. Now next is your control activity. So we have already done M. Here M was your monitoring of controls. Then we already did E. E was your entities risk assessment process. Now we are doing C. C stands for control activities. So control activities key is PIPs. So performance reviews, information processing, physical control and segregation of duties. Okay. So performance reviews, information processing, physical control, segregation of duties. Performance reviews. Okay, P stands for performance reviews. I stands for information processing. P stands for physical controls, and last S stands for segregation of duty. That is your control activity. So what key have we made for this? Where is pips? So for this we have done, so instead of PIPS, I have rearranged these letters to make it SIP Pepsi. So segregation of duties, information processing, performance reviews, and physical control. Because in sitting in a movie theater, you need something to eat, something to drink. So you are sipping Pepsi. So that is SIP P. Okay, so that was your control activities. Now your third is your control environment. Fourth is your control environment. We have already done in monitoring of controls. E is your entities risk assessment process. Then what did we do with C? C is your control activities. Now with C we are doing control environment. So there are two controls. One is control activities. Next is your control environment. So control environment is human resources policies and practice. That is what policy and practice the human resources team are doing. Then is management's philosophy and operating style, assignment of authority and responsibility. So the original key that I made was HR key mato, that is HRCIMATO. Okay. So assignment of authority and responsibility. Next is your communication and enforcement of integrity and ethical values. So if you want to learn that key, that is HRMACITO. Okay, so communication and enforcement of integrity and ethical values. Then M stands for management's philosophy and operating style. We have already done this. Okay. Then T stands for participation by TCWG, and O stands for organization structure and commitment to competence. Okay. So if to remember the key, I have made another way to remember this key in this PDF. I remember. Correct. So how we have done it? We have done it as him actor. So for control environment, it is a him actor. The key is him actor. So H, if you remember, is HR. Okay, so H is HR. Then your I stands for integrity. M stands for management's philosophy. A stands for authority and responsibility. T stands for competence, T stands for TCWG, and OR. So from organization structure, I have taken both OR so that it becomes actor. Okay, so OR is your organization structure. So over here, for those who have taken the notes, if you don't like this key, you can also make it as him, actor. Okay. Now your last part is information system and communication. So what are we doing? Please do not remember the topic that we are doing. I will show it to you also. That is your components of internal control. I hope it is visible to everybody. That is your components of internal control. What did we do above this? Above this we did structure of internal control, that is Soda and Asardik. Okay, so now we are doing components of internal control is your information system and communication. So identify record of all valid transactions. Next is describe transaction in detail to ensure proper classification. Next is your present transaction and disclosure properly. And last is your determine time period in which the transaction has occurred. Okay, so to learn this, the key that I've made is CDERT, and over here also I've made a very nice key. So that is, can director inspire real talent? So this is the sentence that I've come up with regards to movies. So can director inspire real talent? So C for classification, D for disclosure, uh, I for identify and record, and T for time period. Okay, so that is your information system and communication. Now your systems get dirty, so therefore it is C dirt. Okay, okay. So with this we are done with this part. Coming to your next one, that is review of system of internal control. So to review, evaluate the design of control involves considering whether the control is capable of effectively, again the same words will be used, preventing, detecting and correcting misstatement. Whether my control should be able to prevent, detect, correct, prevent, detect, correct, prevent, detect, correct. Okay, so my control should be able to prevent, detect and correct material misstatement. System of internal control may contain manual elements when judgment is required. That is your internal control. It is not necessary that all of them are automated. There might be some manual judgment also required at times. So your review of internal control helps auditor know how much reliance to be placed on the system itself, because how much of it is automated and how much requires manual judgment. So he knows that how much reliance, how much can he depend on the system. Next is locate areas of weakness. He will be able to identify that where my internal control is weak, so there might be more possibility. There it is more area of weak. So locate areas of weakness in system. So audit program and NTE of substantive audit procedures can be adjusted, and any deficiency in internal control shall be communicated to client. That is, the client should be told that boss, over here, your internal control is weak, it is deficient. It is duty of the auditor in course of audit to check whether they have been corrected or not, and till what extent. That is, whatever deficiencies he is told to the management, whatever deficiencies he is told to the client, whether they have been corrected in the next audit period or not, he will have to check those. Great. So now coming to the next part, that is internal control assessment and evaluation. So this was your review of system of internal control. Okay, now we are doing internal control assessment and evaluation. So components to assess and evaluate the controls environment. So standard operating procedure has been defined. So well-defined SOP helps define role, responsibilities, processes, and control. So if your SOP is well defined, that is, it is a document, that is your standard operating procedure. Break the word, hear the word properly, absorb the word. What does it say? SOP stands for standard operating procedure. That is, all the procedures have been listed, and they say that what, this is your standard, this is what you have to follow. So first is your job rotation in sensitive areas. So to learn this key, I made it as JDs. So that is job rotation in sensitive areas, that is S. Then your E stands for enterprise risk management. D stands for delegation of financial power documents. I stands for IT based controls, and S stands for segregation of job responsibilities. Okay, so first is your job rotation in sensitive areas. That means whichever sensitive areas, whichever processes or areas are more prone to fraud or material misstatement, that is, they are sensitive, job rotation should be more frequent. That is, different people should be doing the same job, so that if any person has done fraud, this will be identified by the next person who replaces him. That is your job Rotation. Your E is your enterprise risk management. That is how the enterprise itself manages risk. Then your D is delegation of financial power documents. Delegation is giving this responsibility to someone else. I is your IT based control. Whatever IT based controls are there, that should also be defined in your SOP. And S stands for segregation of job responsibilities. It should be properly defined that how which person is responsible for what part. Okay. Techniques of evaluation of internal control. What are the techniques of evaluation of internal control? How do you check whether my internal control is effective or not? So you do this via three ways. So first is your questionnaire, second is your checklist, and third is your flowchart. Okay. So Q, C, and F. So what key I've made it over here is your for JDs is to learn it in a cinematic way. It is Karan Johar. Okay, so this is your Johar directing is exciting. Okay, so that is your JEDINS. So Johar directing is exciting. That is your Karan Johar. Okay, and techniques of evaluation is quickly fix costume. That is your this key I've written wrong over here. Instead of FCQ, it should be QFC. Okay, so quickly fix costumes. That is your technique to evaluate internal control. That is how you check whether my internal control is effective or not. What did we do? We did questionnaire, then we did a flowchart, and then we did checklist. So what is questionnaire? It is your standardized internal control questionnaire, which is intended to be filled by the company's executives. Answer will mostly be either three ways. It will be yes, no, or not applicable. Not very time consuming or detailed questionnaires. I mean, questionnaires will be detailed, the answers will not be detailed, and questions should be logical and sequential. That is, they should come in a proper order. Then next is your checklist. So list of matters that the auditor shall check. He makes a checklist that both have to do this, have to do this, have to do this. He makes a list of all the things that he has to do. Answer over here also will be yes, no, or not applicable. And coming to our last part, that is your flowchart. So a flowchart is a graphic representation of the internal control in an organization. So if you remember during inter also you had made flowcharts in your subject EISM. So that is a graphic representation of internal controls in an organization. It gives a bird's eye view of the system. That it gives an overall view of the system. That is what is happening. And last is easy to see interrelationship of activities and how they are integrated. That is which activities related to which. So since my charts are also somewhat in the form of a flowchart, because if you see our when we are doing standards, it is connected, so you get to know which activities are related to which, and by happening yes, no, what happens in each case. So that is your flowchart. It just gives you a basic more understanding of the internal control and the organization. Okay, now next is your reporting to clients on internal control weakness. So reporting to clients on internal control weakness, key I've made it is Rama. Now how do you learn this is okay, so that is race against movie awards. That is your Rama. Got it? So that is your race against movie awards. Hmm. So first is auditor should communicate material weakness to management in written form. Any material weakness should be communicated to the management in written form. That is your letter, email, whatever. Important point that should be done is first is valuable reference document for management for the purpose of revising system. So this document that they give you, that you give to them, since you will be typing out everything that was what was the problem, what has happened, while telling them the weakness, it will serve as a helpful document. It will be a valuable reference document for management for the purpose of revising system. If they want to change, they will be able to show that boss, the auditor gave us this, that's why we are changing the system. The letter lists areas of weakness in system and offer suggestion. This letter that you get, it will show what area, and you will also suggest them how to avoid this or how to get better. So you will give them suggestions. Next is your letter may serve to minimize legal liability in event of major defalcation. That is, in case things go wrong in the future, if any fraud is found, so you will this letter will prove that boss, I had already told that your internal controls are weak, please take care of this. I had already told this to them. Next is yours, they should indicate It only includes those weaknesses that have come to the attention of auditor while conducting audit. That means that I was checking my audit, I was doing my audit procedures, and during my audit procedures, I noticed that both this internal control was weak. Therefore, I found a discrepancy in my sample or in my testing, whatever. Therefore, I found out that this internal control is weak. So this does not mean that if I've given you 5 internal controls are weak, it does not mean that rest all internal controls are okay and only these 5 are weak. These 5 only I have come across while doing the audit. Okay, so this key was Rama. Reporting to client on internal control weakness. So reporting to client is the key that we've done, RAMA, Racing Against Movie Awards. Okay, and last part of the chapter is your framework of internal control. So the framework of internal control, how do you remember this? It is COSO, COVID combined and SO. Coso, Coco, COVID, 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 combined SO, Coso, Coco, COVID, Coso, Coco, COVID. Okay, Coso, Coco, COVID, combined and SO. This is how you'll remember this. So first is your COSO framework, next is your COCO framework, then is your COVID, that is your control objective for information and related technology framework. Next is your combined code, that is also called as your Turnbull report, and last is your Sarbanes-Oxley, that is section 104. So therefore this is SO. So COSO, COCO, COVID, combined SO. COCO, COSO, COVID, combined SO. Okay, so that is your framework of internal controls. Framework of internal controls. I will also be uploading the mnemonics on the Telegram channel. So the link will be in the description. You can take a printout of these PDFs, no worries. Please learn these. Okay, so your COSO framework, it includes more than 20 basic principles representing the fundamental concepts with respect to 5 components. So what are these 5 components? Control environment, risk environment, control activities, information and communication, and monitoring. And 3 categories of objectives are your operation, reporting, and compliance. That is whatever we are our objectives will be. First we have to check whether they are operating or not, then we have to report this, and we have to check whether it is in compliance or not. Next is your COCO framework. COCO framework is your criteria of control, therefore it is called COCO. So C for criteria, O for off, and then control is CO, therefore it is called COCO. So it includes 20 criteria for effective controls in 4 areas of the organization. So 4 areas, which are these 4 areas? One is purpose, second is commitment, third is capability, and last is your monitoring and learning. Okay, then comes your COBIT. So COBIT has 34 processes covering 210 control objectives in 4 domains. So over here also 4 domains. So if you remember, COCO is 5 components, then your COSO is 4 areas, then your COBIT is also again 4. So it is 5, 4, 4. First was your COSO, second was your COCO, third was your COBIT. Okay, that is we are doing, that is control objective for information and related technology framework. So your I've capitalized the letter so that you will be able to learn what COBIT is. So 4 domains are planning and organization. Next is acquisition and implementation. Third is delivery and support, and fourth is monitoring and evaluation. So I hope you learn these key points. These key points you will have to learn so that you are able to write in the exam. Okay, so these are your 4 domains. Next is your combined code, or that is your Turnbull report. So the principles are: board should maintain sound system, that is good system, good practices, good sound system of internal control to safeguard shareholders' investment and the company's asset. Okay. Next is your director to at least annually conduct review of effectiveness of group systems of internal control and should report to the shareholder. Next is companies that do not have internal audit function should review for the need from time to time. So if you do not already have an internal control, you need to check that both should I have an internal audit team right now or not. That has to be checked from time to time. And last is your Sarbanes-Oxley Act, that is section 404. All publicly traded companies must establish internal control and procedures for financial reporting and document test and maintain those controls and procedures to ensure their effectiveness. Okay, so with this we are done with this, we are done with this chapter. So let's quickly revise. Okay, so for those who have already straight away jumped to this part of the chapter, no worries, we will be doing the learning part together. I've already made the keys and everything so that you don't waste your time. Great. Okay, so first we did phases of risk-based audit. If you remember phases of risk-based audit, we started with the movie RRR. So there were three R's. So first was your risk assessment, second was your risk response, and third was your reporting. These are your three R's. So that is your phases of risk-based audit. Second, we did that when obtaining audit evidence about effective operations of internal control, the auditor should consider. What does the auditor consider? He considers how consistency and whom, that is, how the internal controls were implemented, how they were applied, the consistency with which they were applied, and third was your whom, that is by whom they were applied, who implemented these internal controls, that also matters. Okay, coming to our third part. Okay, this covers your entire chapter, so please pay focus. Third part is your internal control ensures that all transactions are, what does it ensure? It ensures your RRR has popcorn very small. So RRR popcorn very small. So there were three R's. So if you remember, it was real, it was recorded and recorded timely. Real, recorded and recorded timely. Then what did we do? It was actually PPPP, which I took the letters of the other word. So if you remember, your P was properly posted, your C was classified, then your V was properly valued, and S was properly summarized. Okay, so this was your internal control ensures that all transactions are okay. Next is internal control helps in making reels. So first R is it helps in reliability of internal and external financial reporting. So basically reliability on reporting. Next is your effectiveness and efficiency in operation. Both your E's are done. Next is compliance with laws and regulation. This L is done, and S last is safeguarding of assets. Okay. So this was your internal control helps in. So this was, if you remember, this was in the green part. Then there was black part in the middle. That was your objective. So objectives we did. Sweet actors are very rare. SAVR. With SS, assets and recorded are safeguard. Transaction authorization. Assets verified and actions are taken. And last is transactions are promptly recorded. That is, whenever the transaction happens, it is recorded. Sweet actors very rare. With S, what did we do? Safeguard. With A, what did we do? Authorization. With B, what did we do? Verified. And with R, we did recorded. Okay. So we are done with the objectives. Next is your limitations of internal control. If you remember, it was on the right side of the table. So limitations of the internal control. If you remember, we made a key over there. We made it as Mukha. Over here, we have made it as Umac. That is unhappy marble actors and concentrate. With U, if you remember, it was unusual transactions. So with U, we are done with unusual transactions. Then with M, it was management misrepresentation or manipulation. So that is manipulation by management. Then A is abuse of responsibility. Whoever has responsibility of the internal control, he might be abusing it. Next is collusion with employees, and last is cost greater than benefit. This is your UMAC. Okay. Then is your structure of internal control. Structure of internal control, how we did soda at Asardik. Soda at Asardik. So that is your segregation of duties. AT stands for authorization of transaction. ASS stands for accountability and safeguard of assets. ARD stands for adequacy of records and documents, and your IC stands for independent check. It does not stand for internal control. Okay, so segregation of duties, authorization of transactions, accountability and safeguarding of assets, adequacy of records and documents, and your independent check. Okay, this was your structure of internal control. Now, if you remember, this was your structure of internal control. Below this was a table in blue color which had 5 things. Over here, we did messy. So, since that was structure of internal control, this is components of internal control. Okay, I hope you start remembering things now. Components of internal control. What key did we did? We did messy. So, your M stands for monitoring of controls. Your E stands for entities risk assessment process. Then there were two C's, and I told you both the C's are control. One is control activities and one is control environment. And your last is your information system and communication. Okay. So we did monitor. We already did monitoring of controls. Monitoring of controls made we did. There are two eyes. That is internal and internal. One is internal check system. One is internal audit. Next is your entities risk assessment process. Entities risk assessment process is Bollywood tap is for gangsters. Okay. So with B we did new business, new technology, new accounting pronouncement, new personal and new or revamped information system. So these were your all the news. Then is expanded foreign operations, changes in operating environment, corporate restructuring, and rapid growth. BTAP is for G. So if you see our key for BTAP and is all of these till BTAP is all of these are with regards to new. So therefore I've put it also in that order so that all of these are together. Okay. Now next is your control activity. So we did M, we did E, now we are doing C. There are two C's, control activities and control environment. So we are doing control activities. Control activity. Drinking is an activity, correct? Sipping Pepsi is an activity. Therefore, control activity is your sip Pepsi, that is SIPP. So that is segregation of duties, information processing, performance reviews, and physical control. So sipping is an activity, therefore control activities. Next is your control environment. So environment is an actor, him actor. So for him actor, it is human resource policies and practice, commitment to competence. Sorry, I have messed up the order. So that is human resource policies. I is your integrity and ethical values. M is your management's philosophy and operating style. Then A is your authority and responsibility. C is commitment to competence. T is participation by TCWG, and OR is your organization structure. Okay. Then coming to our information system and communication. So information system and communication is your CDER. Can director inspire real talent? So for this it was proper classification of transaction, information system and communication. So it should be properly classified. Next is present transaction and disclosure properly. Third is identify and record all valid transaction. Next is determine time period in which transaction occurred. Okay. Next is your internal control assessment and evaluation of SOP. The moment you hear SOP, you should remember JDs. Okay, so for JDs, what did we do? That is your Johan director is exciting. So that is your job rotation, delegation of financial power document. I is your IT based controls. S is your segregation of job responsibilities, and E is your enterprise risk management. Okay, so this was your JD. Then next is your techniques of evaluation of internal control. That is, how do you evaluate? How do you check whether my internal controls are effective or not? You should automatically remember we did a key, that is QCF, that is questionnaire, checklist, and flowchart. So questionnaire, checklist, and flowchart. Okay. Now coming to our, I know this might be cut for you, but I am not able to scroll down more. So from next time, I will add an extra page in the end so that I am able to scroll down till the end. Okay. So reporting to clients on internal control weakness. So reporting to clients was RAMA, that is Race Against Movie Awards. Reference to documents for revising system. Area of weakness in system, it will minimize legal liability. That is, they are giving us the importance of why we should give this document to them and include those weaknesses that have come to the attention of auditor. You have to tell them that these are only those controls that have come to my attention. There might be more controls also. And last part of this chapter was framework of internal control. So your framework of internal control was COCO, COCO, COBIT. COSO, COCO, COBIT combined and SO. Okay, so that was your COSO framework, COCO framework. COBIT is your control objectives for information and related technology framework. That is your COBIT. Then there was your combined code, and if you remember in the bracket it was also written Turnbull report. And last is your Sarbanes-Oxley Act section 404. And with this, we are done with the chapter. We are also done with the quick revision. And I hope you learn these notes by heart because the entire chapter is covered in this. And I will see you in the next video. Like the video, and we'll move forward.